In 2022, Cape Coral was America's hottest housing market. Buyers fought bidding wars for homes that vanished overnight, prices soared 75% in just 2 years, and investors rushed in on the promise of endless sun and easy profits. Then, almost overnight, it all collapsed. Today, Cape Coral ranks dead last in the nation. Home values are tumbling, 8% of owners owe more than their houses are worth, and foreclosures are spiking as thousands of families watch their dreams turn to ruin. How did the ultimate boomtown become ground zero for the worst housing market collapse of 2025? The answers start at the very peak, where every bubble looks unstoppable until it suddenly bursts. Cape Coral's skyline shimmered with possibility as the housing market reached a fever pitch in early 2022. Rows of new homes stretched toward the horizon, each one a marker of a city in the throes of transformation. In just 2 years, the median home price catapulted upward by 75%, hitting $441,000 by April, a number that echoed through conversations, headlines, and open houses. That figure became a shorthand for the city's new identity, a place where ordinary families suddenly found themselves sitting on fortunes, or locked out of the market entirely. The pace was relentless. In May 2021, home values were climbing at a staggering 26.1% year over year, far outstripping any rise in local wages or inflation. Real estate agents watched as their phones buzzed with offers, each one more aggressive than the last. The old rules no longer applied. Homes listed on a Monday could be under contract by Tuesday morning, sometimes without a single in-person viewing. Buyers from New York, New Jersey, and the Midwest joined the rush, lured by the promise of sunshine and the fear of missing out. Remote workers, retirees, and investors all converged, each convinced that the window was closing fast. Zillow and Redfin tracked the surge in real time, their price indices climbing with every new sale. The numbers told a story of scarcity and urgency. Sellers set deadlines measured in hours, not days. Inspection waivers became routine, as did bidding wars that pushed prices tens of thousands above asking. Some homes changed hands multiple times in a single year, each sale resetting the bar for what a Cape Coral address could command. Builders scrambled to keep up, filing 4,388 new permits in 2021, almost double the previous year's total. Construction crews worked around the clock, their progress marked by the constant drone of saws and the rhythmic thud of hammers. By August 2022, the average home price reached $429,775, more than 70% above the city's long-term trend. Cape Coral had vaulted into the ranks of America's most overvalued housing markets. For a brief, breathless stretch, it seemed as if the laws of economics had been suspended. Each new record only fueled the frenzy, as buyers wondered if the next listing would be their last chance. How high could it go? The question hung in the humid air, unanswered. For those caught in the rush, the experience was equal parts exhilaration and anxiety. The finish line kept moving, always just out of reach. In a city built on dreams and sun, the boom felt unstoppable. Until, inevitably, the moment arrived when gravity would reassert itself. Sunrise over the Caloosahatchee River, and another moving truck rumbles into a freshly paved subdivision. The promise of a new life drew thousands to Cape Coral during the pandemic. Florida welcomed 314,000 new residents in 2022 alone, more than any other state. Cape Coral became a magnet for remote workers escaping dense cities, retirees chasing warmth, and investors hunting for yield. The rules of geography changed overnight. Work from home meant a Manhattan software engineer could close on a canal-front ranch without leaving her Brooklyn apartment. IRS and USPS data tracked the addresses changing by the thousands, as families rerouted mail and futures southward. Mortgage rates, once a hurdle, fell below 3%. Suddenly, A $350,000 home in Cape Coral cost less each month than a cramped studio in Boston or Chicago. Buyers pounced. In 2021, 7,032 sales closed in Cape Coral, a record that dwarfed the previous decade. Agents fielded offers from out-of-state numbers at all hours. Investors, emboldened by cheap debt, bought sight unseen, wiring deposits after a single FaceTime tour. Retirees arrived with cash from up north, eager to stretch savings in a place where sunshine was free and property taxes low. For every family unloading a U-Haul, there were 3 more bidding online. The city's population swelled, and demand for homes outpaced even the most optimistic forecasts. Builders raced to keep up, but supply always seemed a step behind. Neighborhoods that were empty fields 2 years before now boasted rows of new roofs and freshly sodded lawns. The city's growth became self-reinforcing. Each new arrival fueled the urgency for the next. The competition was fierce. Open houses became flashpoints, with buyers offering above list price, waiving contingencies, and promising to close in days. Some never set foot in Florida until after closing. The old Cape Coral, known for retirees and quiet canals, faded into memory. In its place, a city remade by pandemic migration and the relentless logic of cheap money. For a brief moment, it felt like the city could absorb anyone who wanted to come. But as the pipeline of newcomers stretched thin and prices soared far beyond local wages, the question shifted. How much demand was real, and how much was borrowed from the future? The answer would soon matter more than anyone realized. Bulldozers carved new roads through the palmetto scrub as developers raced to meet the hunger for homes. In 2021, Cape Coral's building department issued 4,388 permits, almost twice as many as the year before. The city's skyline shifted with each new roofline, each slab poured under the Florida sun. Builders, flush with deposits and emboldened by record demand, pushed projects forward at a pace not seen since the last real estate frenzy. For national home builders like D.R. Horton and Lennar, the calculus seemed simple. As long as buyers lined up, supply could only lag behind. But beneath the surface, warning signs flickered. By August 2022, the average Cape Coral home price had soared to $429,775, a figure more than 70% above the city's long-term pricing trend. Economists at CoreLogic and local analysts flagged the gap as unsustainable, a chasm between what homes were fetching and what fundamentals could support. The city's market became a textbook case of overvaluation, with prices drifting ever farther from the anchor of local incomes and historical norms. The numbers were stark. While the rest of the country saw price gains moderate, Cape Coral's market detached from reality. Developers, driven by profit targets and emboldened by the pace of sales, filed for more permits even as supply chains strained and labor costs climbed. Internal communications from major builders, later disclosed in city records, reveal a mix of optimism and pressure. Sales managers urging teams to keep up with migration trends, executives betting that Florida's boom would outlast any short-term volatility. The feedback loop was relentless. Rising prices justified more construction, and more construction fed the narrative of endless demand. The city's own planning staff struggled to keep pace with the volume. Permits were approved in record time, often with little pause to consider the risk of flooding or the long-term sustainability of so much new inventory. By late summer 2022, the risk was clear to anyone reading the data. Cape Coral was not just building for today's buyers, but for a future that might never arrive. With each new subdivision, the gap between price and value grew wider, leaving the city exposed to any shock that could reverse the flow of newcomers or shake confidence in the market. As the cranes swung and the concrete trucks rolled, the question lingered. What happens when the music stops? The answer, as builders and buyers would soon discover, lay not in the number of homes rising from the sand, but in the widening gulf between hope and hard numbers. Wind howled through Cape Coral on September 28, 2022, as Hurricane Ian battered the city with relentless force. Streets that had been busy with moving vans and construction trucks turned into rivers overnight. Water surged past seawalls and poured through neighborhoods, swallowing lawns and creeping into living rooms. In the span of a single afternoon, thousands of homes, many built during the pandemic boom, were left gutted, their drywall stained with the dirty watermark of the Caloosahatchee. The storm's path cut straight through the heart of Lee County, bringing a peak surge that topped 15 feet in some coastal areas. In Cape Coral, entire blocks lost power as transformers blew and cell towers toppled. Families huddled in darkened bedrooms, listening for the groan of roof trusses and the crash of debris against windows. By dawn, what had been a landscape of newly sodded lawns and fresh paint was a patchwork of blue tarps and shattered fencing. FEMA teams and local crews began their assessments while the water still lingered in the gutters. Damage reports flooded in. Across Lee County, more than 24,000 homes and nearly 5,000 businesses reported storm damage. Cape Coral's share was immediate and visible. Streets lined with waterlogged furniture, appliances stacked at the curb, drywall and insulation tossed out with the trash. Many of the hardest-hit properties were less than 2 years old, their owners still unpacking boxes when the storm hit. Insurance adjusters fanned out, clipboards in hand, trying to keep pace with the calls. Flood maps, once theoretical, became all too real. Areas that had been fast-tracked for new construction now sat in the expanded floodplain, their resale values suddenly in question. FEMA's revised maps would later redraw the city's risk zones, but for thousands of residents, the reality was already clear. Their homes were no longer safe or even habitable. The city's housing stock shifted overnight. Newly built homes, once snapped up by eager buyers, were now labeled as distressed inventory. Some owners, unable to afford repairs or facing insurance shortfalls, listed their properties as is, hoping for a quick sale to investors or contractors. Others waited for relief checks that would never cover the full cost of rebuilding. Cape Coral's promise of endless growth met the brute force of nature. In the weeks after Ian, the sound of hammers and saws gave way to the rumble of debris trucks and the drone of generators. The city's boom had collided with a $112.9 billion disaster, and the consequences would ripple through every block. For the first time in years, the question wasn't how fast homes would sell, but how many would ever be livable again. Mortgage rates, once a tailwind, turned into a wall. By the end of 2022, the Federal Reserve began lifting rates in the face of surging inflation. The days of 2.8% loans vanished almost overnight. By 2024, buyers faced mortgages near 7%, a level not seen in 2 decades. The effect was immediate. For a $400,000 home, the monthly payment jumped by more than $1,000 compared to the pandemic low. A city that once welcomed a flood of buyers now watched them vanish. But the pain didn't stop at the bank. Insurance costs, already climbing before Hurricane Ian, soared into uncharted territory. Lee County's average premium hit $2,519 a year, but for many homeowners, especially those in newly redrawn flood zones, bills arrived for $5,000, $7,000, or even more. Mark Friedlander of the Insurance Information Institute calls it the new normal for coastal markets, a world where coverage shrinks as costs explode. Some carriers, like Farmers and AAA, simply pulled out. Others issued non-renewal notices by the thousands, forcing families onto Citizens, the state's insurer of last resort. For buyers, the calculus changed overnight. A home that felt affordable in 2021 now came with a monthly insurance bill rivaling the property taxes. Lenders scrutinized every policy, sometimes refusing to fund loans for homes in high-risk zones. Deals collapsed at the closing table. Agents fielded frantic calls from clients who discovered their premiums had doubled, or that their coverage was being dropped altogether. FEMA's latest flood risk maps offered little comfort. By 2050, nearly every home in Cape Coral is projected to face significant flood risk. Insurers, armed with new climate models and actuarial data, began pricing that risk in real time. For some, the cost of staying insured became unsustainable. The result? Demand froze. Buyers who once bid sight unseen now hesitated, calculating not just the mortgage, but the insurance, the assessments, the risk of being left unprotected. Sellers slashed prices, but the pool of qualified buyers kept shrinking. Cape Coral's market, once buoyed by cheap money and the promise of perpetual growth, entered a deep chill. The pipeline that brought thousands of newcomers each year slowed to a trickle. For those left holding the keys, the promise of homeownership was replaced by the reality of mounting bills and growing uncertainty. In the summer of 2025, Cape Coral's housing market sits at the bottom of every national ranking. The numbers are unflinching. Nearly 8% of homeowners now owe more on their mortgages than their houses are worth, the highest rate of negative equity in the country, according to Adam and CoreLogic. For a city that once promised instant wealth, this reversal is staggering. In Austin and San Antonio, both pandemic boomtowns, the rate hovers just above 4%. Here, it's almost double. Foreclosure filings have become a grim routine. 1 in every 2,200 homes faces a foreclosure notice, more than 100 cases in a single month, echoing the legal chaos of the last crash. Court dockets fill with families trying to hold on as lenders move to reclaim properties. The echoes of 2008 are unmistakable, but this time, the pain is concentrated among those who bought at the peak, many with little equity and few options. Home values have tumbled. The median sale price stands at $361,000 in May 2025, down 7.7% from a year earlier, and nearly $80,000 below the high watermark of April 2022. Zillow data puts the average even lower, at $343,431, a 10% drop in 12 months. For buyers who stretched to purchase during the frenzy, the loss is more than just a paper cut. Its life savings evaporated. National rankings now place Cape Coral dead last, 123rd out of 123, in the July 2025 Hottest Housing Market Report. The city that once led the nation in price growth has become its cautionary tale. In May, just 608 homes sold, a number that barely dents the swelling inventory. Sellers slash prices, but buyers are scarce. Each week brings another round of price reductions, another wave of listings lingering unsold. The human impact is everywhere. Families who bought with FHA or VA loans, low down payments, little cushion, are trapped underwater. 3 out of 4 negative equity mortgages in Cape Coral are federally backed. City records show a surge in applications for foreclosure prevention grants, with households eligible for up to $10,000 in emergency funds. For many, it's a last-ditch effort to stay afloat. Short-term rental investors are exiting too. The Airbnb gold rush has ended in a glut, with landlords dumping properties at losses as rental income dries up. Distressed sales pile onto the market, deepening the price slide. The spiral feeds itself. Falling values push more owners underwater, fueling more distress and more forced sales. Every statistic points in the same direction. Cape Coral, once the poster child for pandemic-era prosperity, now leads the nation in housing distress. The numbers are no longer just data points. They are the lived reality for thousands of families wondering if the bottom has truly been reached. Rows of new homes sit silent under the Florida sun, their driveways empty, lawns trimmed but untended. The construction boom that once defined Cape Coral has become a glut. In January 2025, more than 3,046 newly built homes are listed for sale, 4 times the inventory seen in October 2021. For builders like D.R. Horton and Lenner, the math no longer adds up. Finished homes linger on the market for months, forcing deep discounts and incentives. Some offer mortgage rate buy-downs or cover closing costs, desperate to move product that once sold out in days. The city's multiple listing service tracks the surge. Total inventory swells past 15,000 properties, a 12.3-month supply that dwarfs any measure of healthy demand. The pipeline of new arrivals, once the lifeblood of the market, has slowed to a trickle. After years of historic growth, Florida's net domestic migration has ground almost to a halt. In 2022, more than 314,000 people made the move. By 2024, that number is a fraction of its former self. Agents note the shift in tone: fewer out-of-state calls, open houses with more sellers than buyers, and a growing sense that the demand that fueled the frenzy has vanished. The migration reversal isn't a mass exodus, but it's enough to tip the balance. Thousands fewer arrivals mean thousands more homes left waiting. Investors, once eager to snap up anything with a roof and rental potential, are now heading for the exits. The short-term rental boom has fizzled. Airbnb listings flood the market, many priced below what owners paid just a year or two before. The largest local LLC operator offloads dozens of properties in quick succession, accepting losses as rental income dries up. Bulk sales and auction listings replace the optimism of the pandemic era. For every investor selling, another builder cuts prices, creating a race to the bottom that leaves ordinary homeowners squeezed between falling values and rising costs. The oversupply feeds on itself. Every new listing adds to the pressure. With so many options, buyers can afford to wait or demand concessions. Nearly 35% of homes on the market see price reductions. The average listing now sits for 69 days, a far cry from the bidding wars and instant offers remembered just 3 years ago. Builders, stuck with unsold inventory and mounting carrying costs, halt projects mid-construction. Layoffs ripple through the trades. Contractors and suppliers scramble for work, their order books emptying as quickly as the city's optimism. Cape Coral's market, once defined by scarcity, now drowns in excess. The logic of the boom, build more, sell faster, has flipped. With demand flatlining and supply still rising, prices have only one direction left to go. For homeowners who bought at the top, the consequences are immediate and personal. For the city, the lesson is written in every empty house and every slashed listing. When the pipeline dries up, even paradise can go out of style. Court records from 2008 line the shelves in Lee County, 40,000 foreclosure filings in a single year. Back then, Cape Coral became a national symbol for what happens when speculation, easy credit, and rapid growth collide. The city was labeled Ground Zero, its neighborhoods dotted with abandoned homes and auction signs. 17 years later, echoes of that crisis resurface, but the faces in distress have changed. On a quiet street near Pine Island Road, a family receives a letter from the city. The envelope holds a lifeline, up to $10,000 in foreclosure prevention funds, just enough to cover missed mortgage payments and keep them in their home a little longer. Their story is far from unique. 3 out of 4 underwater mortgages in Cape Coral are FHA or VA loans. Federally backed, low down payment, and often the only path to ownership for working families. For buyers who closed in the frenzy of 2021 or 2022, the math was simple. Move in with as little as 3.5% down, trust that values would keep rising, and hope the Florida sun would shine on their investment. But insurance premiums doubled, repair bills from Hurricane Ian piled up, and the market turned. Now, the family's home is worth less than their mortgage. They can't refinance, can't sell without bringing cash to closing, and each month, the gap grows wider. The city's aid program, funded through municipal reserves and federal grants, is a stopgap, one that hundreds have already applied for this year. Grant applications are filled with handwritten pleas and spreadsheets showing budgets stretched to the breaking point. If we can't stay, we'll lose everything, one applicant writes. For Cape Coral, the pain cuts deeper because it's familiar. The city has lived this cycle before. First as the epicenter of subprime excess, now as a cautionary tale for families who did everything by the book, only to find the rules had changed. The difference is in the details. No wave of risky loans this time, but a new class of vulnerable homeowner, caught between the promises of federal programs and the realities of a market in retreat. 40 miles down the Gulf, the world looks different. In Naples, brokers arrange private showings for $70 million penthouses. Developers pitch beachfront villas at $35 million each one promising sanctuary from the chaos to the north. The median home price in Naples hovers near $700,000, almost double Cape Coral's $343,000. Palm trees shade driveways lined with luxury SUVs, and insurance premiums, no matter how steep, rarely threaten to upend a sale. Budge Husky, CEO of Premier Sotheby's, describes Naples as reliably buoyant, a market insulated by global wealth. What we're seeing is a rebalancing, he says. Naples continues to attract buyers from around the world. They're not worried about rate hikes or insurance. For them, Florida is still a safe bet. In Cape Coral, working families and retirees watch their equity disappear. In Naples, wealth acts as a shield. The contrast could hardly be sharper. Two cities, 40 miles apart, moving in opposite directions. The luxury market shrugs off the storms and the headlines, while Cape Coral's middle-class neighborhoods face foreclosure auctions and price cuts. The divide is more than dollars. It's a question of who can weather risk and who cannot. Nationally, the warning signs are spreading. Austin and San Antonio, both pandemic boomtowns, now see more than 4% of homeowners underwater, about half Cape Coral's rate, but still double the national average.